Hi, this is Joe Rabil with Rabil Stock Research. So what I want to do is I'm going to start out with a lesson on a specific pattern that I think is fitting when the market is really volatile. When it's volatile, we got to focus on price, and I'm going to show you the rules of this setup that I think can be pretty advantageous when we're in this type of environment. So I'll go through that and I'll give you an example of it taking place in actually the S&P. All right, and then once we're done with that, I want to go through a couple different scenarios in the way the market could develop here. There's really three different ways we could set up, and I want to just lay out what to expect in any of those types of scenarios. When we're done with that, we'll cover some other indices, and then we'll also look at the symbol requests that came through. Let's go ahead and get going. Okay, so I refer to this pattern as an undercut and rally. There are a couple different ways that it could be. You know, I've seen it's a spring or something like that, but I've got some specific rules that are associated with this, and I consider it a legitimate setup when it takes place this way. And we want to be on the lookout for it when our indicators, MACD, ADX, are going to be lagging, especially after a severe market drop or a stock that makes a big drop and then shows a swift reversal. The ADX and the MACD are not meant to be able to keep up with that type of volatility. All right, so that's when we have to focus on price and use this specific setup. So let me just lay this out a little bit. So we start out with a stock that's basically going sideways. Now, I want you to put it in this terms. This is the longer term trend. So I've got moving averages and the longer term trend are rising. All right. Now, so this is taking place. Now, sometimes you'll get the undercut that'll break the 18 on the higher time frame, but it'll still be rising and it'll be above the 40. Okay, so we have this. Basically what we're looking for is a drop down, and it's almost like a shakeout pattern, because in reality we're shaking out into a higher time frame support. Okay, so that's what we're looking for. We're looking for sideways consolidation, and let's say this stock has made a move up and then it goes through a corrective pattern, and then it looks like it's kind of breaking down at this point, but in reality, again, it's more like a shakeout into the higher time frame uptrend. All right, so I wanted to lay that out from a visual standpoint. The rules are the higher time frame needs to be in an uptrend, just as I portrayed there with the moving averages. Secondly, we want this reversal to happen quickly. Now, I say a few bars. I would say within 5 bars. I mean, it can be down here for a month. If it's a weekly chart, you could do that and get back above, and I'm okay with it. All right. But if it's down here for a couple months or for an extended period, like 8 bars, because this can happen on any time frame. So I'll look at it from a bar standpoint. It could happen, on a daily chart. And if it's down there for a couple weeks, then I really wouldn't consider it as strong of a setup. All right. Now, one of the things you do is we go down to the smaller time frame and look for this hitch. I show it on this pattern, but in reality, let's just lay it out. So let's say this is the 18-month line. All right. This is an 18-month. All right. This is the weekly chart, and then the daily might be the one that's creating the hitch. All right. I'm going to show you exact example of this when we get to the S&P. But I want to make sure you understand we're looking for some kind of a little pullback that's testing the breakdown level. So you break down, you get back above it quickly, and then you come back and test it. All right. And so that's where I was saying we could go down to a smaller time frame, like a daily chart, if we're looking at this on a weekly. So what it boils down to is this is a 3 time frame setup. But we don't have to worry about the indicators. The indicators are going to lag here, and they could be showing signs of real strength to the downside. But if we get this type of reversal, we can take it more seriously. So let's look at what's taken place in the S&P. This is something I talked to my subscribers about when it was happening. In fact, it was on my YouTube channel, Invest Like a Pro. I do a Friday update on the S&P and discuss this. So the 500 mark to me is like a key level. It's in any of the big round numbers, 500 or 1,000 or 100 are big round numbers that we want to pay attention to on both on the upside and the downside. We also had a key level here back in April of 2024, and then we had a pretty close to this level, and it was slightly higher, but another level that we undercut just above the 500 mark. All right. So to me, this move down, this swift move to the downside and undercutting 500, taking out this prior low and also taking out this swing low was pretty important. And the fact that it reversed and took it out and reversed very quickly was a sign that we needed to be on the lookout for a test of that level and then a reversal back up. All right. Now, you can see how the strength of the downside showed up in the indicators. So if you're waiting for the indicators confirm, you kind of have to wait. Now we'd be waiting for this first pullback. All right, that'll come up when I get into the scenarios that can develop. I wanted to point out that the upper time frame, so this is happening on a weekly chart, this undercut of the 500 level, right, and these prior lows. That's on a weekly chart. Looks like it's breaking down, but on this time frame, you're pulling into the 1840 zone, the zone between the 18 and the 40, and the 18 is still rising. Okay. Now, a lot of times you'll pull back, and instead of pulling back to the 40, you'll be pulling back to the 18 when this happens. Kind of like what happened back in 2023, late 2023. You see how it looked like we were kind of breaking down. It was more of a lower highs and lower lows rather than an undercut situation, but we came down and we look like, and we'll just show you here. You see how this looks like it's breaking down and moving down? I mean, we're in a bear market, and then all it was doing on this pullback, I'm sorry, it was this one here. This ABC correction was just a pullback to the 18-month. All right, so we always want to be looking for down moves on one time frame and seeing if we're hitting support on the next time frame. So we had that. Now, if we go and look at this on the daily chart, I'm going to zoom on this for a sec. So let me just draw in this kind of horizontal area. Ballpark. It was a little above 5. If you take this into account and this low into the account, which was just below 500, you know, we're right in this area. But this chart, this decline undercut all three. That one took out the 500 mark, took that out, and then swiftly turned back up and took it out to the upside. Now, here's where it gets really interesting, because we got this pullback and it held all three of those levels. 500, it held the, basically came down to the first level. Let's just draw that horizontally so we can see how it came back and held that prior low right there. All right. Now, what else took place here that I think was really interesting is that during that pullback, we actually held you see how this formed a pinch? The MACD held the signal line during that period. So what I say a lot of times, when we get a spike low like this, we look for this pattern where MACD holds the signal line and we get a pinch play inside the range. So this is an inside the range trade. If we get that confirmation with an undercut and rally, that really should increase your confidence when it takes place. All right. We had the massive volume. We did have the strong momentum condition, but as I said, the MACD and the ADX are going to lag in this situation. So we have to know when we have high volatility, and we clearly had high volatility based on the way I measure it. And when that happens, we can be on the lookout for an early entry pattern if we want to play aggressively. All right. So this is for aggressive trades, obviously, but it is something to be on the lookout for. It happens in individual stocks. I'm just using the S&P as an example. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. Okay, let's take a quick look at the 3 scenarios that could develop in the S&P. I'm going to use the spider for this. Essentially, what we're looking for is, one of 3 things, right? We either pull back in an orderly way, find support at the 18-week, right? Which is essentially not that far away from the 18-month line. So if we get a pullback that is orderly. Now, how would I define orderly? And I mentioned the volatility. So I measure volatility using the average true range. All right. I'm just going to show you this quickly. This is something I do on my Friday video for the market update on my YouTube channel. But I've got the average true range, and I've got an 18 moving average of the average true range. And if you notice what's taken place here, we're starting to pull back. The volatility is starting to drop. The size of these bars is getting smaller. But what we want to see is this pullback, the market pullback towards the 18 and the 18-week and the 18-month line, while this keeps dropping. If this were to bounce off this line and turn up while we're pulling back, then we know that the volatility is still too high. We're probably going to channel, probably going to have a much harder time doing anything significant to the upside. One of the other things that I do is measure the RSI. Now, I left this like this because I get a lot of questions on how we overlap it to make it look like this. You see how I've got the two RSIs together on Stockcharts? So we can just take this, grab this, click on it, and drag it like that, and then they overlay. So I wanted to make sure everyone knew how to do that. But what I'm looking for is what took place on the daily chart. We had to move to the upside, and we got to pull back to the 18 here. And it was actually the close to the weekly line as well. We got the RSI 5 to pull back from overbought. You see how we're kind of overbought here. If we get a pullback here where the red 20 RSI holds above 50 while the RSI 5 drops below, then we have basically a buying opportunity. So that's what we're looking for. We haven't had that take place since we topped out here. So if the gray line can come down under 50 and the RSI 20 red line holds 50 on a pullback and this starts to drop, then we've got our ideal scenario. That would be scenario one if we get that kind of an orderly pullback. Now, scenario two is it's not orderly. It's a strong pullback. The size of the bars get bigger, stronger, and then it's even questionable as to whether we hold these moving averages and then we turn into kind of like a channeling sort of a situation. All right, so we want to be on the lookout for that. Do we hold on a pullback? Do we hold the moving averages on a pullback? And is the volatility light? Now, the third way it could play out, and you have to give this legitimate consideration, is we break out to the upside. This goes ahead and tries to continue from here. Now, what I'll say is that we never got that RSI buy I mentioned. We're already overbought, and we've had the momentum conditions not really get themselves into position to confirm this uptrend. Now, I mentioned the earlier signal where you don't worry about these, but now we've moved up into the highs. I kind of feel like I want to see at least some signs of better improvement in these before I feel like I'm ready for the next buy signal. And the problem is that if we follow through from here and we go ahead and move up, yeah, we could move higher and we could potentially break out. But I think we kind of run into problems probably pretty quick. When I see this type of pattern where you break out from an overbought condition, you can have a little bit of follow through, but then you probably consolidate after that. So don't expect a big run. You could get a little bit of follow through from that, but maybe not a big run. That would be the third scenario. And then I think what ends up happening is it probably ends up coming back down through the prior high and channeling sideways or trying to find support later. So again, don't get overly excited on a breakout if it happens from here. I think it would be much better suited for the market if we get a quick pullback first. Okay, let's switch over to the QQQ. Whoops, go to the QQQ here. And let's just, the fact of the matter is this is very, very similar to what the S&P is doing. All right. One of the things that I'm focused on right now is what's taking place here is on the daily chart. We've moved up. And if you notice, it's more of an upward drift. It's not like a really strong breakout, consolidation, breakout, consolidation, breakout. It's just kind of drifting higher. And the reason why I think that and have that confirmation is that green DI is continuing to make lower highs. As we make higher highs in price, it keeps climbing higher. The green DI showing the strength of the buyers is not as strong. So the buying strength is actually weakening, even though this keeps drifting up. The other thing I'd say is that you can kind of see that we peaked here and we haven't really made that much progress here, and then we've got the Fed coming out this afternoon. So we'll have to see, you know, how the market reacts to that. But we can definitely see when we go and look at MACD and look at the green DI and look at the fact that the ADX, the blue line, hasn't been able to get above 25. All of these are signs that this is not a strong trending condition. All right. Ideally, we want to go look for the stocks that do have those strong trending conditions and play them on a pullback if it plays out that way. But we're up in a resistance and we just don't have that much strength. And that's why I say if we get strength to the upside on some kind of news, whatever the news may be, then look at it more like a climax signal rather than the start of a big run. All right. That's kind of where I'm situated on this. All right. Let's look at the IWM. Another part of the problem, right? We have great support underneath. You see how this came down and found support right at this key level. So we had this level here. We also had this breakout level here, and that's where this turned. All right. So not surprising to see this rallying. But the problem is that all you've done is rally back to the 18-month. You're still well below all of this resistance up here. You're not showing any real strength on a momentum basis. MACD is still below its signal line. While it is above the zero line, this is telling us right now there's just not a lot behind this yet. All right, so that's on the monthly chart, and we're not seeing much improvement. The momentum conditions on the weekly are very similar to the S&P. Just too much resistance right now, and so I think this is going to need time to work itself out. And we want to see the relative strength improve relative to the S&P. That has not happened yet. All right, let's start going through. I want to make sure I cover all of these stocks that came through. So we got this nice move in DOCS, strong move to the upside with confirmation on the weekly. I want to focus on the weekly, although let's just take a quick look at the monthly first. Big move here, and now look at how we're pulling back towards the 18 months. So this is underlying trend support. We've got good momentum conditions here. All right, so those are all positives. Now we want to go look at the weekly chart. And if you notice what's taking place, we're going through this corrective pattern, consolidating, and these two lines are starting to come together. The MACD is working its way back down to the zero line, and we don't have a lot of strength in the sellers because this ADX is dropping. The red line is not getting above 25. So we're getting closer. I mean, this is definitely one we want to watch for. If you're looking for a little bit of an earlier signal, you could look for a little strength on the daily here. Get a move up and then look for a pullback. And then you could almost jump the gun a little bit on the weekly signal. But definitely a stock to be on the lookout for strength in the near term. I think we've got some lots of improvement here. KMI is a stock I've been highlighting, but I've been waiting for a little bit more strength in this pattern. So really big breakout and a consolidation, great momentum condition in place. What I want to see is a higher low form. I'd like to see this hold the 18-week and turn up. And I think if we've got that, then you kind of look at this like almost like a 1, 2, 3 break here. We break the trend line, and then we come back and test, and then we turn back to the upside. So that's really what I want to see is take out this prior high, these basically 2 or 3 prior highs as this is consolidated down and we have low ADX. And the low ADX, this is down to 8 on the weekly chart. This is telling us this stock is getting ready for a new move. All right. Look at something like KC, Kingsoft, pretty nice consolidation pattern. Look at the strength of the upside. So big move to the upside, good momentum condition. Look at the volume pattern. All that's good, and we get an orderly pullback. And now the pullback is working its way back down to the zero line. ADX is getting closer to working off its overbought condition as well. Now, again, I would be looking for like a 1, 2, 3 pattern on the daily chart as to kick this off. I want to see a downtrend line break that's a little bit more definitive than that. And then play the higher low because I want to see green DI get going here. I want to see MACD get going here. We get that. Crossing the 18, if we get all of that taking place all at the same time, then I think we've got a pretty good pattern. Now, on the weekly, I wouldn't play the downtrend line break because it looks a little too steep. I think you'd have to make it get through this 15 level as a buy signal if you were using that alone. PGEN, Not as attracted to this one, really. Made a move up and didn't hold the breakout area. Came back down a little hard. 18-week is rolling over. This needs a little bit more time. I think, you know, it might have a little bit of a trading move, maybe up to 2 or something like that. But it's me. I would be looking at something else. And then finally, Tesla. This was actually brought up as a short play, but I wanted to compare this. This is why I love using multiple time frames. So you can see this pattern where we kind of top out where the 18 rolls over and we fail at it and it starts down, but it was stretched away from the 18 week here. You see how far away it was from the 18 week? It was way up into this region up here. This one has support. This is doing the same thing on the daily chart, but on the weekly, it's already found support at the 18 week. I don't think there's any room. Here, the MACD was stretched away from the 0 line. On this, it's right at the 0 line, all right? Here, the ADX was extended and above. Here, it's low. It's not the same pattern. It is on a daily chart, maybe close, but it's not the same situation. I actually think this is setting up to go higher. So, got to be careful with stocks like this. Make sure you're looking at the higher time frame. Thanks for watching. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about these techniques, you can go to my YouTube channel. It's called Invest Like a Pro. Beware of the fact that there's another channel out there imitating me that's called @Joe_Rabil. That is not me, and I'm not sure what they're pushing, but I would go with Invest Like a Pro. That's the one that I am running. All right. Have a great trading week, and we'll see you next time.